All right, let's get started this week on the Middle Class Investor. This is Seth Martin, your host. Thanks for coming in. It is Saturday, September 17th, and we are looking at a 10-year timeline of the S&P 500, and each one of those bars on the chart is a month. And the reason I want to start here is because we got a long trend here, and it's working its way to its end, and that is significant because there will be pretty large correction afterwards. And this little ending diagonal that we have here usually is a trend termination pattern. It usually starts off by going back to the beginning, which is right here, but it also signifies the determination of the entire trend. So the entire trend could have either started here or could have started here. We don't actually, there's no way to really know for sure. I think there's a good case to be made either way, but if participants think it started here, then the market will pull back to here, rally a little bit, and then come all the way back here to 1,000. If participants thought it started here, then it'll go a little deeper, maybe below these lows. So now I want to go back to a shorter time frame, and I want to show you something that I've been watching very carefully. As I shift here a little bit, as you know, we had all this chop for really all of, a lot of 2015, and then we had the big sell-off, then a big rally, then another big sell-off, and then ever since then you've got this kind of pattern showing up here. And so I want to zoom in here, and I want to show you kind of what I see here and why I think it's significant. If you look at this rally here, it's kind of a thrust up, and then we had this pullback to another low, and we had a thrust up again, but not quite as far and not as many bars. And if we get a pull, this might be through pulling back now, I don't know, but let's say it pulls back a little further, maybe to here, and we get a thrust up. It's likely to be shorter than this one, which is definitely shorter than this one. So if we count the bars, if we look at the number of bars, we say, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars, okay? And then this thrust up had 1, 2, 3, 4, 5, 6, 7, 8 bars. So 8, it's about 70% of 11, and then 70% of 8 is about 6. So let's say we've got, once this finishes pulling back, we've got 6 weeks up. Now, if you look at where the election is, what this is telling me is that no matter who gets elected, this market is pulling back almost immediately, and might start actually before the election. You might start to see this pullback before the election and then really get going after. So anyway, I just thought that's interesting. This happens a lot in the market where you have these kind of proportional moves, and certainly I think it's worth looking at. So, all right, let's look real quick at the VIX. VIX is the volatility index. That is the way that's derived is how aggressively people were buying index options on the S&P 500, and that aggressive buying pushes up the price, which causes the VIX to rise. So you can see that we've been kind of in this sideways range for a while. Initially we had this, but then it kind of got lower, and so anyway, it poked its head up and came right back down in. Now we've still got a little bit of, there's still upslope on the RSI here, but this tells me that this is going to be in here a little bit longer, probably, before it pokes up. So that would correspond with some increasing prices in the market. The VIX, the reason I always show you the VIX is because we just want to see if the VIX is aligned with the market. So if the market's up, the VIX should be down. If the market's down, the VIX should be up. There are some times when, let's say the market's pulled back, but the VIX hasn't really gone up that much. Well, that's telling you, it could be telling you that there's a lot of bullishness pent up in the market. So we just want to look for we want to see if the moves are proportional. If they're not, if they're out of whack one way or the other, we might be able to glean some additional information about what's going on in the internals of the market, which could then help us make better decisions. I'm gonna look at the short-term yield real quick. We've been talking about this chart for a while. Could also use the 3-month Treasury, which maybe I'll switch to. But basically, what I was saying is that if you got a close up here somewhere and the market started trading up here, that the Fed would be raising rates. Well, clearly that's not happening. In fact, it poked its head up and dropped right back down. So in my estimation, the Fed will not be raising rates next week. There is a Fed decision next week. They're going to announce some sort of decision, and my guess is they will not be raising rates. The 10-year Treasury, it's been kind of in this is kind of a broad channel, but it's been in the channel, and it appears here that it is respecting the channel still. So now this could be, here's your trend line. This could be just a little pullback, maybe into here, and then it goes higher. But as of right now, the channel is being respected, and so I think you gotta give that some credence. We can look at some of these other countries. Let's look at Germany real quick. Germany appears to be respecting the channel too. Now this could all just be one big pullback, and then the market could rally up. But when you're in a channel, kind of the rule or the thing is you're probably going to stay in the channel, and you're not actually going to break out of the channel until you see. You're not actually going to want to trade this market until you see maybe a breakout and then a pullback to the channel, and then it starts to turn up again. So as long as we're in this channel for any of these markets, I think you got to respect it. Japan now did kind of break this trend line, and this looks kind of like a pullback. So Japan is a little different. Although there's some crazy stuff happening over there with their markets and whatnot, I don't know. I don't know if they're going to be able to pull it off or not. It doesn't look like it to me, but as long as this trend line is respected, or you might get what we might be seeing here is we might be seeing a pullback to this channel, kind of like the other ones, and then a rally up to here. So, but right now this is not a good place to enter the Japanese market anyway. You want to see a pullback of some kind and then some sort of reversal. So like if we're looking at, let's just give an example. Let's say I zoom in. I'm going to zoom in right here. And we're going to look at this right here. Now we kind of already know what happens here, so it's a little bit cheating. But you can see we have this pullback, and then you almost kind of have a double bottom here, right? And then you start getting, candles that start breaking out to the upside like this. So you kind of want to see the same thing on anytime you break a trend line. You want to see it break pretty good. Like this one gapped up. This market here gapped up. Put a gap right here, and then took off. So. All right, let's look at the United Kingdom. Same kind of thing. We could almost say the exact same thing. So right now is not a good time to buy the United Kingdom market. I would wait for, sometimes these RSIs and these little oscillators down here are pretty helpful. Wait till it pulls back down into the reversing area and starts to hook. It might be a better place to go long the UK market. All right, let's look at the dollar. Hopefully I'm not going too fast for everybody. One of the reasons I'm going fast is because this is the second time I've had to make this video. I hooked up my mic wrong, and anyway, so doing it for a second time. And maybe that's better. Maybe I don't ramble as much the second time. So the dollar, you can see here the trend line We had this channel. It broke out of the channel, pulled back a little bit. Maybe it's got some more pullback. I don't think so. I think the dollar's ready to go right now. So I would look for the dollar to start moving higher. Probably going to be all kinds of noise about that. These talking heads, they're really afraid of this dollar going higher. All right, let's look at gold. You know, gold, we had talked about gold being done here, but now that I look at it, it looks to me like it just pulled back a little bit and probably wants to make a new high. So we might see gold up in this area and then see gold, back down below 1200. So maybe look for it to go higher from here first. It just looks more plausible at this point than a sell-off that starts now. Now, silver is the same way. It may look scarier because these bars are really long, but that's just the nature of silver. It tends to be more volatile. So I would say when this is done pulling back, silver get up there around 22, and then once it gets up there, then we're looking for a pullback down here to close to 15.5, 16. So hopefully that helps you. It's not, I don't know that I would physically buy gold and silver for this little up move, but if you're trading the GLD or you trade futures or something, you might want to trade for that move. If you're going to actually physically buy gold or silver, I would wait for a pullback into this area first, around 15.5. Crude oil. Well, crude oil, you've had this huge slide right here in crude oil. I mean, that was just a huge move, all fit within this channel. We finally broke out of the channel. And, crude oil is, I still think crude oil is going to go down here. But the question is, at this point, is it going to start going up right here, or is it going to go down and then back up? And I think probably the latter is probably the case. I think you'll see crude oil pull down here and then come back up here and then start to drop precipitously. And the reason I say that is if you look at this chart, let's go to right there. You can see this is a pretty big move, and to me this little up move here is not enough to work off all of this. It needs more time. So I'm thinking you'll probably see crude oil pull down here, maybe even a little lower, maybe down here to this low, down here to around 34, and then a rally up, and then back down to new lows. So I don't know. We'll see, but that's what my thesis is at this point. All right. Let's talk briefly. I've got some videos that I'm going to be putting up. You can see here I've got a Hillary Clinton video that I put up. If you're interested in that kind of stuff. Hillary's funny. I think she just knows that she's so crooked that she just can't possibly let people know who she is or what she's done, But the reason I posted it is because this email server thing it's interesting to me because all the talk about it is about the private email and the server, as if that in and of itself is illegal. And maybe it is, but to me that's not the thing that really people should be upset about. And she kind of gives us a glimpse in this little video clip as to what could be the real thing she's worried about. And you'll hear her talk about a header, a document header that says classified on it, and how this header is so obvious. It's big on the document, and I couldn't possibly have either intentionally or accidentally sent a document with this header on it. And the header's, it'll say classified. It could be for top secret reasons. It could be for confidential reasons. And she mentions another one. I can't remember what it is right off the top of my head. But the reason she brings it up the way she does is to basically say, do you think I'm an idiot? I mean, there's just no way I did this. But what Matt Lauer should have followed up with, and he just didn't, he wasn't able to connect the dots, is Well, Mrs. Clinton, did you or anybody on your staff remove the header from a document and then forward it? Or did you cut and paste the contents of a document and put it in another document and send it or have it received from another sender? And to me, this is where probably the rubber meets the road. This is where the criminal action took place. The purpose of those headers is to track the document's life for the purposes of freedom of information. So Congress passed into law this thing called the Freedom of Information Act, and its purpose is to give a process for the people to know what the government is up to. And it appears to me, or my guess is, she's circumvented that process by either removing the header or taking the contents from a document, cutting it, pasting it into another document that didn't have a header. And she did this for the purposes of obscuring her role in transmitting these documents. That's my guess. And she probably did it because it benefited somebody that had a lot of money that was willing to make a donation to her foundation, her and her husband's foundation. So that's clearly illegal. The thing that upsets me the most about it is that people are sitting in prison today, and some have fled the country for doing essentially the same thing. So I think it's wrong that some people are sitting in prison, and she does basically the same thing, and nothing happens to her. So anyway, that's that video that I posted. Another video that I'm going to be posting is one from a movie called Margin. I think it's called Margin Call. It's with Kevin Spacey, and Demi Moore's in it, and Jeremy Irons. But there's a scene at the end where Kevin Spacey wants out, and then Jeremy Irons basically telling him the history of the United States, and it's the same thing over and over again. He talks about the Panic of 1819 or 1918. He talks about, or is it 1819? It's 1819. He talks about 1929, 1987. I mean, he just goes through all of them, and he says the same thing happened over and over and over again. I just thought it was interesting because a lot of people think 2008 was a once-in-a-lifetime kind of thing, and maybe it is a once-in-a-lifetime deal, but it's certainly not new to financial markets in the United States. And it really rings true what he's saying there, and I just thought that would be an interesting video to post. The other one is there's a lot of talk about Fed rates, raising rates, lowering rates, things like that. And there's a video that on post. Robert Folsom shows a lot of data that charts and stuff where the Fed basically follows rates. And he makes a case for that, and I thought that was pretty interesting. So I'll be posting those. Take a look at those. Feel free to forward them to other people. And I thought maybe there might be some people in the group that would like that. All right, everybody, that is it for this week. Thanks for coming in. If you want to comment or critique anything I have to say, feel free to do that in the comments section of the video. Also, you can follow me on Twitter @InvestorClass. All right, everybody, take care. We'll see you next week. Bye.